Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Caplin Point Labs, one of the mid and small cap pharma company, but is not doing well over the last few months. So let's understand what has hit the stock and why the stock is down so much and what you should do. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Caplin Point Lab, this was established in 1990 and they provide pharmaceutical drugs in regulated and emerging markets. They're still awaiting US FDA approvals on many facilities, but they export to Europe and Asia and many parts of Asia and across Europe. Its market cap is around 2,100 crores, so it is more or less a small cap company. If you look at the numbers of the company, it has been pretty good. The sales have increased by around 45% to 227 crores, whereas the profit has also increased by around 33% to around 57 crores from around 43 crores. It has shown a consistent profit growth with a very good return on equity of 37% and an operating profit margin of 31%. So, in all regards, in terms of numbers, it is one of the marquee stocks of the market. And even in the pharmaceutical industry, you would not see such a high return ratios, and Caplin Point is producing that. If you look at the performance of the stock is falling relentlessly since July 2017 and have lost 66% of its value. And there are other reasons with respect to corporate governance and other issues that Caplin Point is going through, due to which the stock has fallen so much. It has completely gone out of favor, and currently the valuations are attractive. There is strong promoter holding into the stock as well. So reasons for the decline in the stock: delay in the US FDA approval. So people were expecting a US FDA approval anytime in late FY18 or early part of FY19. Already 2020 has passed, so the financial year of 2020 has already nearly gone, and there is no approval from US FDA. And if you remember, there's a video I made with respect to management commentary on US FDA approval, and the approval never came, and that is of Nectar Life Science, and you can go ahead and watch that. Once that happens, any stock or any company that projects that there will be an approval or a big approval or a product launch and it never happens, then the investors get really wary of it and get away from such stocks. So for not having the US FDA approval for the past year or so, from the time it has been told that the approval would come through, is really retarded the stock, and there is selling because of that. Defensives have gone out of favor. So till now, although after budget, I would say that things are changing, and with the dollar rupee equation as such going up, with the dollar getting more expensive, it feels like pharma and IT may come back into fashion again because of whatever that has been announced in the budget. But till now, defensives had gone out of favor and people were looking at consumption stocks. Lower margin products have greater share. So basically, when they are selling in Europe and East Asian countries, these products that they are selling do not have greater margin. Already, I mean, in the pharma sector, you don't get a lot of margins for your products uh, right now because of the different kinds of rules, regulations, and policies from the Trump government. And add to that their products or Caplin Point Labs products have lower margins on them, and that's why the profitability would not be as great as it has been so far. Small and mid cap became a large cap. So this is what has happened over time, that some of the small and mid cap has become large cap, but some of the stocks have gone bettered out of shape. So there are better alternatives in the same industry. There are other stocks such as Sun Pharma, Lupin, or Window Pharma, uh, other companies which have gone down a lot because of US FDA approval here and there. And so people are looking at such large cap companies, uh, which have already gone down 20, 30, 40% because of one reason or the other, and looking at investing in them rather than looking at small cap pharma companies. People would look at small cap pharma companies only when pharma really come into fashion, and all these large cap stocks run up a lot. Once they run up a lot, then people look at alternatives to the same companies and would look at down the industry level in terms of market cap. So at this point of time, even stocks like Sun Pharma or Robindo, etc., are not finding favor. So Caplin is way behind. Pharma and IT. Pharma and IT have uh, are struggling as global uncertainties rise, and we have seen that whatever is happening with the Iran US conflict and a lot of things, these things of global business take a back seat, and that's why many approvals that has to come in might not have been coming in because of these reasons, that the governments of United States or Canada or other parts of the world are more involved into other matters which are of national interest than looking at their foreign policy in terms of trades and tariffs. So one has to be aware of what has been happening globally, because stocks that export globally are affected by any externalities or any external factors that changes, whether it's political, economic, or any other. So what needs to be done? In my opinion, you can buy on declines for long term, but keep track of global events. At these levels, you can buy. There have been issues with the management commentary and conflict of interest, etc., but they have not been major. So the major stock fall that has come in is because of the sector being out of favor, and there is a thought that the company might not do well over a period of time in the future. So probably buy at these levels and look at corporate events as well as look at global events before looking at buying more. Let the results turn around, let the stock turn around technically, and then get into the stock even further. If you have not bought the stock, then kindly don't get into it. Probably get into a large cap pharma company, because they are also coming at a discount. So they are a much safer bet compared to any stock in the sector which is of 2000, 2,500 crores. So better to get into something like a Sun Pharma, Lupin, etc. Have a 5 year view, and whenever pharma comes back into fashion and the stock starts making new highs, any pharma stock, then you try to exit gradually, because these sectors keep on changing, and then you'll have at least a 2 year period of absolute no return, and you'd think that you have bought the stock and made no return in 3 4 years. So keep that in mind while you invest, that when you're making a lot of money, whatever, just make a target of whatever your targets would be, and go ahead and sell the stock if you're making 40, 50, 70, 100% over the next 3 years, 2 years, or if you're making more. Whenever you think that the pharma sector is ripe for a decline, you might not catch the top, but you'll be able to sell the stock relatively at the top. So kindly take that into notice, that all sectors go through a bear phase and a bull phase. So whenever a bull phase continues for a longer than what you expected, go ahead and sell the share and look at other sectors as well, and always have less than 10% of your exposure into such stocks. So this was my video on Caplin Point Labs. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. I really need your support in order to continue this channel and expand this channel further. Thanks a lot.